Let's turn to commodities now, where WTI crude is up 13% in the past month and 70% so far this year. Those concerns he was just talking about, supply shortages, increased demand, that's kept the momentum in crude going. But is this rally getting long in the tooth? Is it time to start looking elsewhere in the commodity complex for the next breakout? Joining me now is Paul Ciana. He is the chief FIC, as we call it, fixed income currency and commodities technical strategist at Bank of America. Great to have you here. So what are you worried about on the crude front?
Thanks for having me, Kelly. It's good to be here. I must tell you, I usually enjoy a cup of coffee with your show, but today I'm enjoying a lot of copper, a lot of oil, and a lot of commodities. And, specifically on the oil front, what we're seeing there is big picture secular uptrend, but we're seeing momentum wane. And what I mean by that is, the last three higher highs this year in oil prices have been reached with lower levels of momentum. So we commonly look at an indicator called the Relative Strength Index, or RSI. That's made three lower highs while prices have made higher highs. For us technicians, that's a concerning sign that maybe there's time for oil to take a breather or even correct lower at the end of the year.
Yeah, and actually 81 was kind of your target there, and we talked about how we broke above that level this week. So you're saying you think a commodity rotation is underway in favor of reducing oil longs and exchanging them for copper longs. Now, I've heard the case for copper in the long run, growth of EVs, electrification, and that kind of thing. But it seems to me like you might be talking about something more short term. Are there any supply problems there?
I'm not sure if there's supply problems per se, but what I do see is a period of time where copper prices did nothing, right? They corrected from the last highs back at about 488, and they went all the way down to about $4. So you have a period where supply in a way was digested by lower prices, and now maybe demand is picking up, demanding higher prices for copper because maybe they slowed down on producing.
That would be a great sign, obviously. And again, like I said, as people are starting to think about the energy transition, all that, they're looking at all of these key inputs to producing that sort of next demand wave that may be coming. So I also think when you say to people that you think the oil rally is getting long in the tooth, are you getting any pushback? Because it is such a loved thesis right now. I think a lot of people are looking for alpha, let's call it, there into year end.
Sure. A lot of the clients that know my work and research are aware that earlier this year in the second quarter, we called for new all-time highs in oil prices over the long term. So we have multi-year outlook on oil prices, on copper prices, and many commodities that are probably more bullish in the street. So the way that I see it, Kelly, is a lot of theses are actually catching up to what the technicals had identified in the first half of the year. So could oil prices persist after a dip? Absolutely. I think for managing a portfolio of commodities or thinking about, how to better position for the next couple of months, reducing some of the oil long exposure looks beneficial because of the way the momentum setups have presented themselves in favor for the base metal, specifically copper.
Interesting. And you're saying you could see copper, if we get to the 488, 500 range, then it would be a long-term breakout that could potentially head to the 560s, 630s, maybe even $730 range. So then a final thought here, where do you see oil ranging? Do you see it falling quite substantially, or how would you sort of explain that, the setup now?
I think the best way to compare the setup now in oil prices is to look at what happened in 2018. With the distinct point that now we're in a secular uptrend in oil, and in 2018, we were in a secular downtrend. So in 2018, after this momentum divergence between prices and RSI, oil prices actually declined about 40%. I don't think we're going to see a 40% correction. Maybe something like 15% that gets down to the 50-week moving average and the trend line that's been guiding it higher since the 2020 lows.
So kind of a higher low. I'm outside of my field of expertise. Paul, thank you so much for joining us to break this down. It's really important stuff, and we really appreciate it.